Good evening, Mr. Edun.
Good evening, Coco.
Over the years, you've been a role model to a lot of us on the capital market. But specifically this evening, we'd like to talk about debt capital market in Nigeria.
The first thing I'll say is that we're not doing badly. You are not doing badly, especially with the innovation of FMDQ, OTC, and even what you are doing in the short-term end of the market that is now basically a structured market. Back then, we had in the capital market on the debt side many government securities. You had federal government development stock that was issued every year by the federal government, and it was passed on. It was like a pass-through to the states, and it was meant to be used for capital projects. And that was a relatively small amount, and it was basically an annual issue that now became a series of issues since they were being issued annually.
Now, talking specifically to corporate bonds, how was that? 80s, 90s.
Once the stock market sort of picked up with indigenization, or two indigenization exercises that brought a lot of unquoted companies to the stock market, along with that, you had the majors issuing debt securities. They've issued what we call the venture stock, 10 years, even going out to 12 years, and I think in one case 15 years. You did have some long-term debt issues, and really that was driven by the tax regime, because that debt was tax exempt. The interest on that debt was tax exempt, or it could be offset against tax. Interest expense could be offset against tax. So that was an incentive, a financial incentive for corporates to issue. So the top names, the blue ribbon names, the multinational names did issue the venture stock. But once again, it was few and far between in terms of the number of issues, and it was a relatively small amount when you compare with what they did with bank debt, short and relative and even medium-term bank debt.
Coming to today, how do we power infrastructure in this country at the moment? What should be the model? Is it federal government that will raise it? I'd like us to talk about that. How should we approach it and start from that infrastructure?
The one option we don't have in terms of funding, even the government's agenda in terms of infrastructural development, we don't have the option of funding from oil revenue. We don't have the option of funding from the federal government budget. So it has to be the capital markets, and in particular, the debt capital markets. That's where the money is, in pension funds, in endowment funds, both nationally and internationally, in the hedge funds, in the investment funds worldwide. But the options we have, domestic resource mobilization, taking the savings domestically, and those savings are principally, I think, in the pension funds, some with the insurance companies and some in the trust funds. But the 4.5 trillion or so that we have in pension funds right now is mainly in government securities. When we look at the domestic resource mobilization, we have to be able to attract, we have to be able to add foreign savings, endowment funds from abroad that are looking for yield, pension funds from abroad that are looking for yield. Given the low interest rate regime they have there, it's going to take something extra for them to meet their goals in terms of the rate at which they need to grow those endowments so that they don't run out of money in the future.
Or the coordination between federal states, unlocking this infrastructure so they look, bankable, they look, they're structured in a way that the capital market will be interested in buying. I mean, in the past, we all saw the first road when you come off the airport in Lagos. Yes. Then you hear that is federal road. When you leave that road and get on another road, that is a straight road, and that is smooth and sailing. That's some web that we need to untangle to ensure that these infrastructure projects become attractive to private investors, or private capital in essence, of the type you were talking about.
What you're going to need is the federal might standing behind those instruments so that pension money can go in there, foreign investors can feel safe going in there. And a guarantee program is very key to unlocking savings, is very key to unlocking financial assets that can now go and invest in real assets. The IMF is now looking at putting together a toolbox, something that can help guide the way PPP should be done.
If we were to unlock this economy at the moment, 4 sectors that you will probably profile for, government and everyone very quickly to turn into commanding heights for Nigeria. Is it still power or is it housing?
At the top of the list must be power. I remember way back when we were doing focus groups and sectoral studies just before coming into government in 1999. That's the Lagos government of then Senator Bola Tinubu. At that time, industry, commercial firms, they said all we want is power. When we tried to talk about tariffs and we tried to talk about interest rates, they said what we want is power. But of course, linked to that is transportation. America was opened up by railways. That rail development was put together and financed by the likes of JP Morgan. It was the financial institutions, it was the big financiers, and that opened up America. To open up Nigeria, we definitely need, especially in terms of evacuation of agricultural products, movement of heavy goods, we need a functioning modern rail system. Foreign financing is not just foreigners. Diaspora financing, diaspora bonds, for instance. We'll be surprised the number of Nigerians that are abroad that are doing well that would want to support this economy and growth back home by buying savings instruments, long-term saving instruments that are Nigeria-based. But you have to give them the right structure. The ball is very much in the court of the operators today. The full team, the regulators, the policy makers, as well as you, the day-to-day operators. But I think there's tremendous scope. It's a question of being innovative. The markets thrive on innovation as regulations change, as policies change, as rules change. People come in and take advantage to the benefit of all. And really workshops such as this one are an important aspect of that. I'm hoping that you can really have a period during which you really exchange ideas and come away committed to really doing more in our debt markets.
To the potentials, as you said, JP Morgan, which merchant bank in Nigeria? Is it time to have merchant banks rather than commercial banks to take this from concept to reality?
With population growth of 3%, with such a young population, with such a high percentage of Nigerians under 19, with such a large number of school leavers, primary school leavers, secondary school leavers, and graduates in particular, we need to grow this economy based on jobs. And that's really where the opportunity for financing domestic production, financing the infrastructure that creates the basis for domestic production. We're at the point where there's a major opportunity to focus on domestic resources, domestic revenue or revenue mobilization, domestic taxes, domestic savings, as well as for domestic production. I think the nexus that people miss is that foreign portfolio investment can be for direct purposes. So, for instance, if you have an issue of bonds by a company locally and that company uses the money to build a factory, there's nothing at all wrong with that. The fact that it's of a portfolio nature means that investor who bought those bonds can actually want to sell them and go, but then another one will come in and replace him.
So looking at the Nigerian financial markets across equity, foreign exchange, debt capital, would like your thoughts on that competitiveness and how we should position for it to be able to, will this financial market support it?
You have to have a financial system that is fit for purpose. You need long-term funding. In order to do that, you need long-term savings, and you need the structures that can fairly quickly, fairly cheaply convert the savings of individuals and institutions into the funding that is required for PPPs to take off, for projects to take off, whether it's even public or private sector. So I like to look at it positively. I like to look at the trend. And I think the key element is that now is the time.
Would you say this is a great platform for Nigeria to take off now?
We must see it as opportunity. And I think democracy is a large part of that. Clearly, what we must not get wrong is our democratic process, our political arrangements. If we say that the large numbers, the democratic background, and oil at still around $50 a barrel with zero theft, with zero leakage of revenues and minimal wastage, it's a very, very strong platform.
I'd like us to round up with the OTC Securities Exchange.
Okay.
Is this the sort of platform you envision then?
Sitting down and talking about it. We had our own internal committees at that time, and we sat down, and it was painstaking, and it was laborious, and the people who started it are not the people who finished it, but there's nothing wrong with that.
If we're going to be going, so long, 15 years, 20 years, insurance, probably 30 years.
The interesting thing about the financial markets and financial instruments is that the issuer has to understand it. The investors have to understand it. So no matter how complex it is, you have to break it down, and it has to be like an open platform. So you have to keep running. Between us in this country, in our markets and outside our markets, we have so many of the answers. The environment sometimes overall can give the wrong incentives, and I think the environment is giving us all the right incentives, and that's why you have the support of SEC, you have the support of IFC for this particular workshop, and you have international interest, because all the right the incentives are there for people to come and participate in developing and growing this economy. Once again, finally, I wish all the participants, I commend you as FMDQ, and I commend all the other sort of sponsors, and I wish the participants every success in this workshop and beyond.
Thank you very much, sir. Thank you. On behalf of the board, I think we should start from shareholders. Vision, Aigimon Kwede, Jibril Akul, that, then put together this FMDQ, the FMDA, the association, leveraging on your vision and that of Mr. Mobolurin and Mr. Adeola, all the people you mentioned, Fola Adeola. The board and management of FMDQ would like to acknowledge the vision and that seed you planted, which we heard about and then could bring up to this point, and to promise you that the challenge that you've put before us, this generation will rise up to the challenge first, and then we'll ensure and deliver the Nigeria of our dream to bring hope and prosperity to every Nigerian.
Thank you very much.